ROI, how it's often misunderstood, how it's often miscalculated. And I told you I was going to be letting you know about a strategy that makes it so that you can increase your ROI with very little effort on your part. And it's what I call human resource ROI. So instead of me putting money into a house, I am putting money into my business. I am hiring people who are then going to be providing a return for me. And this is what, frankly, most of the most wealthy people in our country have done. They invest in their business. Think about the most wealthy. Elon Musk, business. Jeff Bezos, business. What effectively is Warren Buffett doing? He's investing in businesses. And this is coming from a real estate investor who's saying that there is a significant chance that you can put capital into humans and it give a higher ROI than you could even in real estate. Now, the one misnomer, and this is again why you have to analyze the totality of the deal. On the real estate side, it's passive, totally passive. But on the human resource side, it is active, meaning people call in sick. They don't perform. You have to hire them. You got to fire them. You got to train them. You've got to support them. You got to go get, in offices and computers and software and all those kind of things. It is far more active than just buying a deal. You buy a deal, get a tenant in there, they pay you every month and it's over. You buy a note, even better. You don't even have to worry about maintenance or anything like that. You just get and so when you deal with human resources, it is more active. This is why you can't compare the two. However, if you are doing business such that when you hire a new person, that person is generating way more money than you're paying them, you're getting an excellent ROI. And frankly, everyone that you hire should be producing more in income for you than what their salary is by definition. If you're starting up a new side hustle or a business or something like that, and you're saying to yourself, when should I start hiring people? The answer is really simple. When you have something that they can do that makes you more money than their salary. Makes no sense if I pay somebody $100,000 and they produce $100,000 worth of revenue for me. I'm just breaking even. But maybe that's taking it off of my plate. But then by that being taken off my plate, am I able to go do more money? That's a legitimate analysis. But that's an ROI analysis. What kind of return on investment am I actually getting? A lot of times when we're running businesses, we forget the top line is most important, but the bottom line is also important. In fact, my argument is that the bottom line is more important than the top line. Yes, we want revenue. We want to focus on revenue, get revenue coming in, selling whatever it is that we're doing. But the bottom line is what matters. A lot of realtors are guilty of this. They talk about volume. Oh, I did $4 million worth of real estate last year. Who cares that you did $4 million worth of real estate? If you got 1% of all that, oh, you made 40 grand. Good for you. I'm not saying we should ignore volume or revenue, but it is secondary to the bottom line. Does this person cost me more than what they're bringing in? Not just from a salary perspective, but from a benefits perspective, rent perspective, from a whatever resources that they're using. Are they providing bottom line value? So for instance, if you have someone that costs you $100,000, salary, resources, whatever it might be, benefits, but they're producing you $200,000, that is a good ROI. But if they're only producing $30,000, that is likely not a very good ROI. That is not a good ROI. Instead, work it so that you're utilizing human resources to leverage a lot of the things that you're doing. And this is where real estate investors get it wrong. They go and think that you go buy a house and then you yourself are going in and fixing it up. You're laying the floor. You're painting the walls. You're installing the cabinets. You're doing all this kind of stuff. And from an ROI perspective, that is foolish. Use human resources to do that. Don't use sweat equity in that category. Now, I'm not going to say that sweat equity is bad. I'm going to get to that. That's my fourth point, is not just cash ROI, leverage ROI, human resource ROI. we're talking about the human resource. We will eventually talk about sweat equity ROI. But going back to the human resources, like, wait a second. For you to paint, I can't tell you how many times I got a real estate investor who calls up and says, hey, I've been painting this house for 3 weeks. You're painting a house for 3 weeks? That's terrible. Hey, thanks for watching. I've got a free video on a business you can do on nights, weekends, and margins of your workday. So follow this QR code, click the link, and watch that video now.